Hello, this is Commercial Chris, and today is such an exciting today because I've got Dr. Yoon with us. Dr. Lawrence Yoon, he's the Chief Economist with the National Association of Realtors. He usually is talking to people about residential real estate, but commercial is such a huge part of the economy. I know he likes talking about it, and this is the focus of today. I'm sure we'll touch on some residential themes here and there, but I've got like 6,000 questions, maybe seven, that have been percolating in my mind, and new ones keep coming up. And so today, I've kind of got a little list of things that I'm hoping that we're going to touch on. Interest rates, of course, are on everyone's mind. The Fed watch with the new Federal Reserve Chair. AI is consuming the world, and data centers are consuming capital like nothing in history has ever done before. And so that is going to have a big impact on what's happening in commercial real estate, not just from data centers, but also from the way that it impacts on the capital stack. World events, there's so much going on in the world. Here we are in July of 2026, and we've just finished June. And so I know we've got a lot of things that have been happening, some things that are coming up. Politics, with it being an election year, legislation just dropped. And of course, at the very end, Dr. Yoon, what I'm really hoping is that you will have like one or two words of wisdom, knowledge bombs, whatever you can drop on commercial brokers and realtors, and let us know of something that you think is actionable that we should be doing here in the middle of 2026. All right. And with that, Dr. Yoon, welcome to our podcast.
Okay. Hello, Chris. Thank you for having me.
Oh, absolutely. It's my pleasure. Dr. Yoon, Chief Economist, National Association of Realtors. Dr. Yoon, you've prepared a whole bunch of slides. So let's pull up the first slide here. Mortgage rates are so impacted on interest rates. So what do you want us to know about this?
The point here was to say that currently, we have that Persian Gulf conflict. Oil prices seem to be fluctuating depending upon, what's happening on the day, whether there's a peace, whether there is a conflict or not. But looking back in history, back in the early 1970s, the OPEC country essentially did an oil embargo to say that we're not going to sell oil to America and the friends of America, like Europe and Asian countries. And consequently, the oil prices quadrupled at that time. And that led to a whole decade, 1970s, whole decade of high inflation, stagflation, bad economy, which necessitated the Federal Reserve to essentially say, when Paul Volcker was the federal chair, Ronald Reagan coming into the office, sort of whispering together to say, let's kill off this inflation once for all. And they dramatically raised interest rate. So the residential mortgage rate going up to 18%. I think the Fed funds rate actually touched up to close to 20%, which means commercial real estate loan a little above, higher than that. But if you look at this chart, what is amazing is inflation did die off. So it was a short-term pain for long-term gain. Look at this long-term gain from 1980s all the way to year 2020, right before pre-COVID. Essentially downward trend in interest rate, which is very good news for anything real estate, residential, commercial. So downward trend. And so this is just to illustrate that oil prices can have an impact on interest rate environment. Now, the interesting part is even with the Persian Gulf situation, we are not seeing 18% mortgage rate. We are not seeing 10% mortgage rate. It is tad higher, but not anything drastic, because what has changed in America from the 1970s onward is we are a massive producer of oil. So America has become energy independent. Consequently, with so much production of oil, there is an interest rate impact, but it's much milder today compared to what happened in the 1970s.
Yeah, I remember the 70s. I was actually in high school in the late 70s, and I went into college in 1979. And at that time, I don't know what the situation is today, but with your student loan, they would give you the check up front. And so I opened a brokerage account and a money market account, and I put my money into the money market account. So I was getting free money from the government and earning 18% in the money market account at the time. So that was a nice arbitrage I was able to do as a college freshman.
Well, that's yeah, very great thing, for people just at that young age to even consider that. But what I remember about the 1970s is long gas lines. I
Yep.
remember my parents going into gas line one time and they said, "Sorry, you came on the wrong day. Your license tag has an even number ending. Today is an odd number. This is the day before the vanity license plate. Everyone had a number to it." But it was a hard time for the economy. It made America look weak. But today, with energy independence, America is saying, "Look, we can handle this."
Yeah, I remember that also. All right. And so Fed rate versus mortgage rates here. And I'm kind of, surprised actually how little interest rates have gone up considering what's going on with oil prices and the Iranian conflict. Are you surprised by that?
So again, you look at this chart, and what you find is that Fed policy, which is the blue line, while the mortgage rate, one can say residential, commercial could be a little higher because but commercial real estate loan has a larger down payment, which minimizes risk in that sense. But you can see that it's not a one-to-one relationship, but generally moves similarly over a long course of time. But I circle at the end to imply that even without any changes in Fed policy, mortgage rate did go up, but very modestly, even with oil prices rising, again, because of the energy independence of America. And I put that blue arrow downward just to indicate that early part of the year, before the Persian Gulf conflict, that the Wall Street consensus was for about two or three rate cut this year. Now, that is likely to be off the table given what's happening with oil prices. But just consider that we did get a small upward bump in the oil prices once Iran conflict began, but nothing alarming. And then blue arrow with new Fed chair coming in, I think he has a hard time to sort of discuss with President Trump what's going to happen. But I just put that blue arrow just to indicate that early part of the year there was an expectation of rate cut, which may be off the table for this year.
Okay. So there's been a lot of interesting political things going on the Fed watch with Bernanke not resigning from the board after Kevin Warsh took over. Do you have any observations that you can share about all the political stuff that's going on within the board?
Yeah. So Jay Powell, he was the previous Fed chair,
Oh, I
and
said
usually,
Bernanke,
well,
didn't I?
so usually when a new Fed chair is appointed, it's a historical tradition to say step away, because after having the top position, it's very somewhat uncomfortable to remain as a junior player. But Jay Powell is still hanging on. And I think another aspect is Supreme Court recently determined that the White House does not have authority to remove some of the Fed governors. Uh, Part specifically related to one governor, Lisa Cook, which President Trump wanted to remove. But interesting take is that uh, even the Fed chair, he has only one vote, while the other governors has equal same number of vote, one vote each. And there are some regional Federal Reserve. And generally speaking, when the economy is somewhat sluggish. So right now, economy is not in a recession, but it's not a dramatic growth. So one would see what Federal Reserve officials who are considered doves, say like Lisa Cook would be considered dove, maybe the Federal Reserve from Chicago, Austin Goolsbee, who had worked under President Obama, he would be, I think, considered dove. But it's the doves who are saying no, no cut in interest rate, while Kevin Walsh is probably trying to make an argument to say maybe there's a room to cut interest rate because inflation in the future years, with so much artificial intelligence investment into the economy, it will boost worker productivity. Increased worker productivity means lower inflationary pressure in the future. Federal Reserve should not be behind the curve, but rather should be ahead of the curve. So if the Federal Reserve is trying to look at ahead, lower future inflation, maybe there is a room for inflationary cut once this oil conflict completely dissipates.
So, as an economist, you're entitled to your own view. What's your view on that?
Related to artificial intelligence technology is, it's here, it's going to continue to expand. In terms of boosting worker productivity, maybe it will happen way down the line, not in the next year or 2 years. I know people are utilizing, and some people are quite fascinated in terms of how much activity. Let me see, I'm in an office, it's a light sensor require a part. Uh, so I think there will be some increase in worker productivity, but I think that traditional economic factors like the wage growth pressure, oil prices, I think will be more dominant influence at least over the next couple of years. So I think Kevin Walsh may be a little too optimistic related to how the worker productivity will be increasing. He never gave the time frame. Is it next year? Is it 2 years out? But I think trying to get the oil prices under control, that will be more important factor over the short, intermediate term outlook.
Okay. And speaking of the oil prices, with the renewed bombing in Iraq or Iran just over the last couple of days and them reneging on their commitments under the MOU, are you surprised how little oil prices have jumped?
So, it is partly due to the supply increase that is coming from draining down the strategic reserve of oil, both in the US and in China. So China, they need to use oil. They're not buying it from Iran, but they're just draining down some of their strategic oil reserve. So strategic oil reserve was exactly for this purpose. In case of conflict, is there another oil source? So good thing that America had it, good thing that Europe and China had it to bring it down, but one cannot completely drain it out. So at some point, one has to begin to refill. So longer the conflict lasts, I think the oil prices could be troublesome. But if the conflict can end fairly quickly, or why there was not a big price swing from the oil conflict, is because the strategic oil reserve that was available, along with the fact that America is massively producing oil.
Okay, that's interesting. We'll take a quick break to tell you about the Realtors Commercial Alliance, which is California's only association of realtors that is 100% focused on commercial real estate. We empower our members to thrive in commercial real estate through education, networking, fostering collaboration among commercial residential real estate professionals and business brokers. And you can learn more about us at rcaoc.org. We also are supported by deferredtax.com, which is our sponsor. All right. So we talked about oil prices, and I guess you made this chart before last week because prices have jumped just a little bit. So once things get under control, I mean, it looks to me like Iran is going to be running out of the ability to control the strait here pretty quick with all the bombing that's going on, which should mean that the strait's opening up and hopefully oil prices will drop again pretty quickly. What are you seeing for the future price of oil when the conflict ends or there's no longer any control by Iran over the strait?
Yeah. Maybe there is a democratic revolution in Iran because Iranian people, they don't like their government. So there could be some revolution that could happen. Or maybe it's the case that the Iranian economy totally collapses because not only is Iran trying to prevent the tankers from going out, well, America do not want Iran to make money off oil. So anytime there is a closure of the Strait of Hormuz, America is also closing for the Iranian shipping as well, which means that Iran is not gaining dollars or gaining money, and their economy is in teeters. You could just totally collapse. But right now at the moment is somehow both sides think they have little leverage. Iran is looking at American midterm election, and they understand that by raising the price of oil, it makes Americans begin to consider the opposition party. So you can say White House is the incumbent party, so they're looking at. Given that, maybe President Trump is very concerned about consumer prices rising. At the time of this recording in the morning, consumer price inflation, the fresh figures came out, and it did begin to decelerate. I mean, it's still above 3%. Because of that little oil price decline that you see on the chart, but now it's increasing, so it's going to that will change for the upcoming months figures. So both sides are trying to see because America do not want to see higher consumer price inflation, but Iranian economy, they don't want to see a collapse in their economy. So let's see who is able to hold out for longer, or is it better for both to just get an agreement and let the tankers flow out?
We'll see what happens. So oil production is steadily increasing. So what do you want to say about that?
Yeah, so I just was trying to emphasize that reason we don't have the 1970 style double-digit inflation is this chart. So I know that some green environmental movement. I mean, we are actually greatly efficiently utilizing energy now than before, meaning that 1 gallon of gasoline is a more mileage. All the building equipment with solar panels, so that has reduced some of the oil demand. But let's not forget the most important. Without oil production, America would be squeezed from Iran. But thanks to the record high production, America is self-sufficient. America is energy independent, and things like interest rate impact is much more modest this time compared to 1970s.
So recession is something that a lot of people have been suggesting that we would drop into with everything that's been happening with tariffs and everything else. But it looks like we're not seeing that.
We're not seeing that. So GDP growth, the broad measure of everything we produce in the country, has been positive. Now, middle of the graph is little big swings that occur from the COVID lockdown and reopening the economy. So just ignore that middle quick big swings. But the numbers are positive, except for the fact that it is not a very robust positive. So it has to be negative for 2 straight quarters to be considered economic recession. So economy continue to expand. Maybe we want to see faster expansion, but it's continuing to expand. Okay, so this commercial real estate structural spending. So how many new commercial buildings are coming onto the market? Office buildings, the apartment construction, industrial spaces. So you see that it actually peaked back in 2023, and then it's been sliding down. So one can actually say that this is not adding to economic activity. So commercial real estate is actually subtracting from GDP growth because of the decline that one see. But right before the decline, one see a huge run up, and that was due to the cheap credit. Interest rates were low, so people wanted to borrow money and complete office building and such. But one see that it is declining. But the next slide will show even with the commercial real estate activity not contributing to the economy, what is really contributing to it? And it is really the red line. Red line is anything related to artificial intelligence related business investment spending, things like data centers and other such as computer chips, the software development. The blue line is the residential housing sector, just to emphasize, just like on the commercial, it's actually not contributing to economic growth. But it's the red line that is really truly helping the economy hold up. So even though the real estate sector, both commercial and residential, is not contributing to economic growth, the artificial intelligence related business investment spending boom, and you can see the level of boom compared to, say, 10 years ago. Look at the
Mhm.
difference between blue and the red, and look how much spending related to data centers and such today. So economy is not in a recession. Quick one-word answer, why? Business boom in artificial intelligence.
Yeah. So just even over the last week or so, there's been a lot more in the news and on the internet about how Americans are turning against AI. I mean, we saw when graduations were happening a month or so ago, and the AI tech people, the tech bros, they were speaking at graduations, they were getting booed when they were talking about AI, but yet AI seems like it's such an important part of our economy. What do you think about that?
People hear about artificial intelligence replacing jobs and such. And that's a normal feeling all throughout history. So anytime there was an efficiency in technological gain, people always complain, oh, technology will replace my job. We need to stop technology. But of course, if you stop technology, we are living, a day-to-day subsistence. The reason why America is so wealthy is because we allow technology to grow. But I understand the concern. In fact, I'm here. I work out of the Washington office, but today I'm happen to be in the Chicago office. And the governor of Illinois, I think 3 years ago, was celebrating. They got a contract to build data centers in one of the areas in Illinois. Well, what do you know? Governor of Illinois recently stated no data centers. We're going to cancel that contract. A shift in the dynamics apart. I think artificial intelligence business investment will continue to expand for the simple reason you don't utilize technology, country will fall behind. But most importantly, one looks at future military potential conflict, say between America and China, because these two countries are the true leaders in artificial intelligence. If somehow China wins this race, one can say the future military conflict China will easily win, and I think this is something that America do not want to foresee. Aside from the military, technology always bring benefits. 100 years ago, typical American, lived to be age 45. Well, today life expectancy is 77. Artificial intelligence, checking at medical records, efficiently part will help boost that. Maybe people used to work 60 hours a week. Today, average work hour is 37. Maybe in the future, average work week would be 30. So that's improving. But nonetheless, we do understand some people will lose job, even though there will be other job creation. In the short term, there's a massive worker shortage for construction electrician to build those data centers. So if one happens to have hard hat on, there's plenty for a job and a good salary related to it. So anyone who's temporarily concerned about losing job, well, just put on a hard hat and there's a job for you right there.
Yeah, and it's kind of interesting with AI and people seeing some benefits of AI starting to take place, that their overall consumer sentiment is dropping. Because when I look at life, I think, the even the benefits that the poorest people in our society have, kings didn't have 300 years ago. They didn't live the lifestyle that even the poorest members of our society can benefit from.
Oh yeah, yeah, absolutely. So technological advances brings about great comfort for average person compared to the kings and queens of the past years. I'm glad that you pointed that out. But data center, if there is some negativity, whether you boost the electricity bill or the water consumption becomes too intense, or maybe some noise, buzz that happens in the neighborhood, one can always compensate that. So, for example, I think it was either Google or one of those large tech companies went to Louisiana and they built out the data center and they gave so much dollars to the community, they were able to essentially double the salary of the local teachers in the public education system. So as long as there's some kind of balance to say, okay, we're going to offer you this, and if the local community is willing to look at sort of pros and cons of having the data center, I think that's part of the negotiation. In some places like Illinois or state of Maine, they're saying no data centers, don't come in. Well, maybe they are missing out on some economic potential in their local economy, but they're planning for other states. I was in Mississippi with Mississippi Realtors. Mississippi Realtors are saying bring on the data center to their state. They want more jobs in their state. So I think there will be a combination of negotiation, some companies offering the local community, we're going to bring this much dollars to the local community, or boost healthcare access, or boost teacher salary, things like that. I think will easily make it more attractive. But this graph on consumer sentiment, what I find interesting is we are not in an economic recession, yet the data is suggesting as if we are in an economic recession. if you look in the middle, 2008, 2009, that's a great recession. Everything blew apart. Yet today, we're not in a recession. We are in a tight labor market. Yet people are expressing as if we are in an economic recession. So I'm scratching my head over this as to why part.
Well, my opinion is that we have such a negative press that they just want everything that's happening, especially the good things. Like we just got the Trump accounts, just what, 2 weeks ago, and that is going to be such a huge boon to our young people growing up and giving them wealth when they graduate from high school. And yet, people are down in the dumps because everything that's being reported in the media is negative for the most part, right?
Yeah, I think that negativity and also the fact that we are receiving news not from evening television channels, but through social media.
Mhm.
And one of the things on the social media is they need to capture the audience, and the only way to do that is through algorithm. So you like one news feed, before you know it, algorithm takes it over. So you get consistent reinforcing of the view, such that I think in America today we have a greater political divide. People in one political party is essentially saying to the other political party, you are evil, you are trying to destroy the country. So I think consumer sentiment may be reflecting the fact that people view the other political party as essentially trying to destroy the country, and consequently, they're not optimistic about economic outlook.
Well, and talk about foreign influence also having a huge impact on social media. I mean, there is evidence that China specifically is seeding so much negativity about data centers because they want to win the data center war. And I think that's what's seeding a lot of the disdain in people's minds for data centers. And I remember back in the late 60s and the 70s, having grown up during that time, how nuclear energy, which is now making a resurgence, was influenced so negatively by the communists and the socialists. And so we ended up closing a lot of nuclear power plants that are now being reopened.
Yeah, so it could be some foreign influence that somehow impacting the overall sentiment of the America. That's unfortunate, but things like data center, there are legitimate arguments. People back and forth. We live in a democracy. One community do not like it. We have to respect that. But good thing that there are other community that are very willing to accept to say, bring on the data center to our community. It will be a great local economic benefit from it.
Yeah, I grew up on a rice farm. We actually farmed 3,000 acres at our peak. And we would go into town, Sacramento is nearby, and people would say, oh, the rice farmers, they're terrible. They're using all this water and they create all this smoke and everything. And yet, when you look at rice compared to other crops, rice uses less water than alfalfa or orchards or tomatoes, which are also huge crops around the Sacramento area. And people didn't know because they saw the water on the rice fields that rice actually uses less water than the others. And I think the same is true with data centers because data centers, they recycle the water once they're up and running. So they use very, very little water. So payroll and data centers has been a huge concern and a lot going on in the media about that. And yet the results that I've been seeing, and hopefully you can support this, are saying that we're seeing payroll growth and job growth because, like, take radiologists. People said 3 or 5 years ago, radiology is going to be a dead profession because the computers are going to read all the scans and everything. And yet now there's a higher demand for radiologists than there was before because there's more scans to be done. And someone has to watch what the AI is doing and interpret it and communicate it to the patient. So, what do you think about that?
All technology growth always raises big concern about replacing jobs, or even say the self-automated taxis, like the Waymo in San Francisco area. In DC, they recently allowed Waymo to be available in Washington, DC, but with a caveat. There's actual driver. So driver is not doing anything, but is getting paid. Yeah, I'm not sure who is subsidizing that part. But as a consumer, when I rode the Waymo out in San Francisco, the fact that there was no driver, I feel comfortable. I feel very safe, part. Uh, But I think, people who are taxi driver naturally raises concern. But the fact that it's an advancement in technology just means there are jobs being created elsewhere. People working in the technology of the self-automated driving area. So all technology, it replaces some workers, it creates other jobs. And the total job figure that you see here is saying we are not in a recession. The beginning of the graph shows right before COVID, we had a lockdown, so we lost 20 million jobs. But as the economy reopened, more job, such that we have record high employment in America ever. So we are at a record high employment condition. So even with all the graduation speeches about people not having jobs or people will lose job, we're not seeing it in the data.
Okay. And I'm going to stop talking as much because you have a deadline that we have in like 25 minutes. We got a lot of slides to go through, but I'm having a lot of fun having this conversation with you. Thank you, Lawrence.
Yeah, we'll get to however slides we can get to, but this is the same jobs data, but portrayed a little differently. So rather than total number of paycheck that is being issued to Americans, we're looking at how many new jobs that is being added. So rather than total, the net new job, and the month of June, it was 57,000. And one can say from the graph, like the first half of the graph is a little stronger compared to the second half of the graph. But again, we are not in a recession. We have added more than half a million jobs since the beginning of the year. But if we go to the next few slides, there's a reason as to why the job market cannot be super strong. There's two unique things that are happening in this economic cycle that has never happened before. One is that federal government has been slashed away. So one can say if you are slashing away job on purpose, well, naturally you're going to have weaker job addition. So this is people thought federal government employment is recession proof. Well, we are finding it is not recession proof. People are saying there was so much fraud. In fact, it not only is an inefficient federal working staff, but the money they're sending out is not helping people, but it's leading to attracting a lot of fraudulent activity. So way to stop it is you have to reduce the size of the government. Other people are saying, well, we are losing some government service. But the job numbers are weak partly because of massive slashing away at the federal government level. And I think the next slide shows the second reason, which is we are currently seeing that southern border is effectively shut down. So unauthorized immigration essentially means people coming into the country without the right documents, just crossing the southern border. One see a large increase during President Biden administration. Today, the figure is actually negative to imply that people are not crossing the southern border, but also there's some degree of self-deportation that's happening. And I think that more controversial, more contentious is ICE operation that's happening. Condition and all the community have different perspective on it. But the reason why the job numbers are a little softer compared to the past is we have two unique factors that never happened before. One, negative immigration or undocumented workers negative. And the second part is federal government is slashing away. So one should not expect high job addition number from these factors.
Yeah. Okay.
And just to continue on that part is because we don't have the labor supply, especially coming from the southern border, the unemployment rate is very tight. 4.2% by any economist definition would be full employment. Anyone who wants a job can find a job, except maybe not in necessarily their corresponding profession, but there are jobs available. There are plenty help one assigned. Some people may say, well, this is imply that maybe we need to have more immigration. Maybe we could have more legal immigration through a work permit process. Or some people say, well, maybe Americans can get into the job. So say American who's trained in construction, rather than being undercut by immigrant, now they can maybe get a little higher salary because of the tight labor market. But just objective factual data, job market, job gains are a little sluggish because of two unique factors, and unemployment rate still remains low and tight, even with the slow job addition that's happening in the country.
And we've actually got millions of blue collar jobs that are available that are going unfilled. And so blue collar wages are probably at unprecedented highs compared to what expectations were even 3 or 4 years ago, correct?
Yeah, yeah, absolutely. The oil production that's happening, or even the construction workers, electricians involved in data centers. I think six-figure salary has become norm for some people going into that industry. But there are many uh, blue collar jobs, welding, all that. Many companies are saying they are simply not enough Americans or skilled labor force. So maybe some Americans, rather than go to four-year college, be settled with student debt, maybe they can go immediately to technical training and then consequently go into fields like construction, electrician, welding, where there is a need for labor force.
Okay. And healthcare jobs are booming too. Is
Yeah,
that
yeah,
because of the
just to
aging of
emphasize.
America?
So one is looking at where the jobs are. We talked about the welding and others, but healthcare, nursing, certainly booming.
Hmm. So we've got some interesting blue and red states here, right? And some of these are kind of surprising to me
Right. So
because
this is a 1 year change in job figures, and my staff just color coded it to emphasize which state is adding jobs. So the blue color is adding job. It's not a political map. I know many people are associating blue, red,
yeah.
political part, but they just ignored it. Just so in this map is showing that essentially a little over half of the country is adding job, while other states like one sees in the graph, Oregon, Virginia, District of Columbia, State of Maine, with fewer jobs today compared to 1 year ago.
Well, I got to say personally, I'm really happy to see DC with -5% job growth.
I think that's part of the federal government employment slashing it away. But I
Yeah.
like to look from real estate perspective impact, not 1 year change in job, but multiple years. So I thought pre-COVID is a good reference point. So looking at pre-COVID versus today, one sees that nearly every state has added job, with the exception of Vermont, Hawaii, and District of Columbia. But every state has added job, but some states are true superstars if you want to look at long-term perspective, and that is green color states. So you are looking at Rocky Mountain time zone states,
Hmm.
Texas, Florida, and Carolinas. They are the superstars. Dark blue will be above national average. Light blue, positive, one step slow, but at least they're adding jobs.
Yeah. What surprises me is Nevada and Utah and Idaho having such strong growth.
One goes to Boise, Idaho, and they said, well, they have so many Californians moving in to Boise. And same thing in Las Vegas, same thing in, say, Phoenix. So maybe they're capturing some of the exodus of some of the Californians moving into the region, but also the business community. As business community are thinking about where to set up new business, they're saying they want to set up where it's more business friendly. So if Utah is offering more business friendly environment, why should I generate job in Seattle region rather than in Salt Lake City? So people are making those determinations. And unemployment rate, again, even with the slow job addition, unemployment rate is very, very tight across the country. Some states like Florida, they're adding a lot of jobs, but there's also many newcomers coming into Florida. So job numbers are a little higher in Florida compared to the rest of the country. But the figure of less than 5% unemployment in Florida is still implying tightness in the job market. So essentially, every state, even if you have a sluggish job gains, still tight labor market, one can just walk the main street and they see help wanted sign. But one can also go into professional business site like LinkedIn, and there's so many job opening for accountants and other professions as well. We are in labor shortage.
Okay. And commercial real estate. How much of your time do you actually spend on commercial real estate, Lawrence?
As an economist, even if I look at the residential market, one has to be cognizant of all aspects of the economy because the interest rate environment, all this are based on the full economy and not just on the residential. So naturally, I look at the commercial real estate as well. So when I look at the commercial real estate, one thing that popped out is that number of loans that require stream financing because unlike residential with 30-year fixed rate mortgage, on commercial is more shorter term duration, 3 year, 5 year, 7 year. People want us to refinance. Much of the commercial loans were taken out when the interest rates were low, 2022. But now the time period is coming where they have to refinance, and one can see that there's an overhang. They have to refinance at higher interest rate, and sometimes the collateral value, especially in the office sector, has declined, and consequently, the lender is saying, okay, I can refinance you at higher interest rate. I mean, that's not a good news. But then they say you have to come up with additional money to make up for the loss in the collateral value, which is a difficult proposition.
Yeah, equity infusion is a huge problem.
And just to show that collateral value overall is below what it was in 2022. So at a time when people are taking out commercial real estate loan compared to what it is today, one sees that the value has declined, especially in the office sector, which makes it difficult. Just one little comment. Yeah, I think everyone heard of like San Francisco, a certain trophy building, office building, $100 million, for example, pre-COVID. Then it was being sold at $10 million during where people did not go to downtown San Francisco because of crime, dirtiness, and things like this. They elected a new mayor in San Francisco, and he wanted to clean up the crime and stuff. So office prices are now beginning to bump up, say from so just going to the cycle, 100 million to 10 million, and now to $40 million. So how the property prices can quickly change depending upon the election outcome.
Yeah, politics can have a huge impact on our society, right?
So we do have this oil price uncertainty, but I think another part that is ongoing is large federal deficit. So red line shows everything government spends on Social Security, national defense, say food stamps. You add all together. Red line shows federal government outlays. Well, how much dollar is coming in? It's the blue line. Now one can say, how do you close the gap? How do you reduce the budget deficit? Is it trying to bring down the red line or trying to boost the blue line? That's political debate that people will have. Uh, so large budget deficit is not good news for real estate. It just means that interest rate cannot decline so much. Government is borrowing so much money. The money that could have gone to the mortgage market, whether for commercial real estate loan or for residential, well, government is gobbling that up because they need to finance their debt.
So how recent is this chart been updated? Because down at the bottom it's saying January 25, but you don't have an annual update on your timeline. So was
Uh,
this updated, here in the last couple of months? Because I do see maybe it looks like there may be a slight dip on that red line at the very tail there.
yeah, I think it's up to January 2026. I forget exact, how long, what the last data point is. But definitely would have covered the September of last year when the fiscal year, how the Washington defines, finished. But I think it does cover up to either December or January of this year,
Yeah.
the recent past months.
Well, one would hope with all the layoffs and personnel with the federal government that we would see at least some dip, and maybe the fraud being looked at, that we would see some dip in government outlays.
So deficit is a 1 year phenomenon. Debt for average consumers, average American, deficit and debt, that is the same thing, something bad. But as an economist, there is a two distinct deficit is a 1 year phenomenon, while the debt is cumulative of all past debt. So we are, as you can see, very high levels, and how do we address it? Now, some people who are true believer in artificial intelligence would say, well, artificial intelligence will boost GDP growth in the future years. And that's how we remove the deficit situation over time. Now, things like trying to remove fraud all helps, yeah, but also removing fraud is just satisfying for most consumers. People don't like fraud, so some people are not doing legitimate work and taking taxpayers' money. That's just simply unfair. So removing fraud certainly satisfied many people's common sense understanding of what is just. But the impact to the overall debt number on the fraud could be more minor, but the big impact, I think, could come from faster GDP growth if it was to occur in the future because of artificial intelligence.
Okay. Well, and I think a lot of people, they don't understand that there's only so much money out there. And if the government is sucking up the money, that means there's less money for free enterprise and for us as individuals to have access to if we want to, you know, buy a business or build a building or buy a home or whatever it is. There's only so much capital available in the market at any one time. And if the government's taking the capital, it leaves less for us.
Absolutely. So that's the crowding out effect that economists study in the textbook to say government borrows, there's less lending available to the private market, including for commercial real estate, residential real estate, and other private sector, less money available because government gobbled it up.
So we're running out of time. This has been such an interesting conversation, Lawrence.
Some people are saying because of huge national debt, dollar is collapsing. Well, the data is showing dollar is not collapsing because there's really no other alternative to the dollar. Europe is in bigger deficit mess than America. And China, I think people at the moment do not trust China, so people do not want to hold on to Chinese currency for their cash reserve. So dollar is still, despite what people say is collapsing, is still the king.
Kind of in wrapping up here, what do you see happening over the next 6 months being a political charged election year?
So definitely related to the expenditure to elect candidates has become much more expensive. I'm hearing that Ohio Senate race will be almost equivalent to the past when like when George Bush, Michael Dukakis were fighting it out during that time, how much money they raised. Well, that amount of money for national presidential election amount is being now dedicated for Senate race today. And the House of Representatives, any swing district, it has almost become almost like the Senate race campaign funding part. But I think that society has become much more divisive. But overall economy, again, we are not in an economic recession. The data uh, artificial intelligence related to business spending still is booming. Stock market is sometimes shows a little wobble, but if one looks back compared to 2 years ago, 5 years ago, it is up substantially, implying that we are not foreseeing any economic recession. In the housing sector, home prices have boomed. I know this is for commercial real estate audience, but how that is related is homeowners have feeling financially comfortable so they can go out to the restaurant and spend. And therefore, you will support the retail sector. Or they're clicking online to buy stuff online, which will help the industrial sector. Only office, I think, still has some uncertainty because many companies are implementing hybrid work schedule. Whether that hybrid becomes looser, meaning that 3 days a week in office becomes 2 days a week in office, which means there will be a lot of empty office utilization in any particular day. So there could be some steady downsizing by companies in the future years. But the commercial sector, apartment, little oversupply at the moment, but there is a very little permitting on apartment, which means that 3 years from now, we may begin to see apartment shortage. Today, we are in apartment surplus, but since it takes some time to actually build, now very few people are taking out permits to build apartments, that we may begin to feel some shortage of apartment buildings, say 3 years down the line.
One of your earlier slides was showing that the building units in commercial was actually declining. And yet, we just celebrated the 1 year anniversary of the enactment of the One Big Beautiful Act. Um, And that has these huge tax benefits for real estate construction, but you have the permitting process and stuff. When do you feel that we're actually going to see the real impact of the One Big Beautiful Act actually impacting on construction apart from data centers?
So, is really the market dynamics. So there was an overbuilding of many commercial buildings, industrials, when the credit was cheap back in 2022, industrials in the apartment sector, less so in retail, which is the reason why retail vacancy rates are steady and not rising. But given that new construction activity or intention of new construction activity has fallen, we may see falling vacancy rates in most commercial sector. Only the office appears to be a bit uncertain, but the recent bill that was also passed related to the housing that incentivize some of the conversion of empty office space into residential units. So that will reduce office vacancy rates over time. Opportunity zones, many other things, I think will steadily help on the commercial real estate. But the market forces of high vacancy rate in industrial, along with apartment, I think that has held back some of the buyers, even with the big, beautiful bill that was passed.
Okay. So the 21st Century Road to Housing Act that just became law Friday at midnight. Um, you mentioned there's some conversion of office space in there. Is there anything else in that bill that's going to impact on commercial real estate that you've seen?
I think, just the general, the economic developers, because opportunity zone to build more, say, apartment buildings. So people who specialize in, tax credit opportunity zone, and there could be some apartment shortage again down the line, maybe not immediately. So, looking into those angles. There's like 50 different small items. Maybe any one of those items is not a big impact on the residential real estate, but cumulatively, essentially, it is to say lower regulation, more federal funding to locality where they do reduce regulation, and less federal dollar going to communities where they are still imposing heavy regulation. So again, to sort of financially incentivize the communities to lower regulation, build more housing. And I know that many commercial practitioners, even though they're not in the game of buying and selling homes, they are in, say, helping out the home builders develop land site selection, things like that. So I think that this bill, Housing for the 21st Century, does have many work possibility for commercial real estate practitioners.
Okay. So with a long-term view of seeing interest rates hopefully going down, uh, there's some people like myself. I've got a house that I'm getting ready to put on the market, and I'm just curious if there's like a magic number that if I decide to carry back some paper that would help me sell my house faster, or maybe a piece of commercial real estate.
The inventory situation, we are still short on inventory. I think the interest rate goes down. Naturally, there will be boost in the housing demand. And then the key question is whether or not the sellers will respond to that. And if the sellers do not respond, we could face another housing shortage. So the prices ramp up. But one act that is not part of the Housing for the 21st Century, but NAR is actively working on, is capital gains exemption. So
Mhm.
when people sell their home, often they don't have to pay capital gains tax. But in some high cost areas like California, Florida, and others, home prices are expensive. And especially, say, elderly, their spouse passed away, so now they're single. Their exemption amount is only 250,000, and if they were to sell their home, they're hit with capital gains tax. So therefore, they change their mind. They don't want to sell. So what NAR is working on is lifting the capital gains exemption amount, double that amount, so that we have more supply coming onto the market. When I speak with our advocacy team, fabulous advocacy team, constantly meeting with members of Congress, they're looking into reconciliation bill to see whether or not that capital gains lifting of that could be included, because with increase in home value, more Americans, knowingly or not, are getting ensnared in this capital gains tax, and we don't want that to happen to Americans.
Well, hopefully it gets indexed to inflation in the future also.
Oh yeah, I mean that would be more common sense. So when it was passed 30 years ago, somehow it was not indexed to inflation, which is the reason why today we have 13 million homeowners who could be ensnared from the capital gains tax, and we don't want that. So trying to lift that capital gains
Yeah.
exemption amount.
And I think a lot of people, when their spouse dies, they don't realize that there's a step up in basis on the underlying asset. So that $250,000 exemption is actually much more valuable, perhaps, than the $500,000 exemption was, especially for people in California.
So step-up basis is certainly important, but we don't want for the baby boomers to pass away before the transfer of property. I think many baby boomers probably are saying that there's a better home, maybe a smaller size home or in different community which I want to go into, but I don't want to do it now because of capital gains tax. So it's the tax policy that's hindering improvement in people's lives. So we don't want that to happen. People should improve their life based on their circumstance, but this capital gains tax is hindering that.
Yeah. So as we close here, do you have anything actionable that a commercial real estate agent, a commercial broker, a commercial realtor can take today to position themselves for the rest of this year, maybe for next year?
So how, the downturn in commercial has occurred in the past a couple of years because of the commercial real estate price decline, but it appears that the prices are beginning to stabilize. And once interest rates begin to go lower, property prices will be firming up, and naturally that will lead to more transactions because people, commercial properties are in much better position for transactions. And there is also more transaction happening once the interest rate decline. Related to the leasing activity, because of the job growth, economic expansion, leasing will continue to happen. And for some people who need to refinance those loans, even though it's a difficult proposition, it appears that many local banks, so it's not the national banks that has provided commercial real estate loans, but it's the local banks. They understand the customer much better. So I think there's a way to negotiate out in a more win-win proposition. You take a little loss, I take a little loss. So in the lender and the borrowers to extend that loan a little further. Extension is not pretending to be better. It will actually lead to better outcome because I think the interest rate 1, 2 years from now will be lower.
So based on your view of the future, because I know you've got a better crystal ball than I do, probably, is if you have an agent who wants to transition, say, from residential into commercial, which segment of commercial do you see as most promising in the future?
I would say, the retail is very steady. So retail is very steady. I think there will be some boost in the industrial, but for residential converting into commercial, I think the apartment, because naturally there's already some, similar thinking process involved. So going into the apartment area, especially knowing that there is a surplus of apartments today, but there could be a shortage of apartments 3 years from now.
All right. Lawrence, this has been a fascinating conversation. I wish we had more time together, but I know you've got some pressing engagements and you'll be traveling to Tennessee tomorrow.
Yes, so looking forward to talking with Tennessee Realtors.
Yeah. So thank you very much for joining us today. This has been Commercial Chris, commercial realtor. I operate across the United States working with residential agents, helping them close their commercial transactions. And so if you are in the market for commercial real estate, please let me know. My phone number is there on the bottom of the screen. And of course, if you are an agent and you're interested in learning more about the Realtors Commercial Alliance of California, we invite you to join us on our website at rcaoc.org and learn more about us and reach out to us so that we can continue to serve you properly. Lawrence, thank you again. It's been illuminating, insightful, and I'm sure people are going to get a lot out of this video.
I enjoyed it. Thank you for having me, Chris.
Thank you. Take care.